Hey guys, what's up and welcome to a new Tesla update video. So, all that being said, let's just get right into it, guys. If you enjoyed the video, of course, please don't forget to hit that like button, subscribe, all that good stuff. And yeah, let's just jump right into it. So, absolutely just explosive day for Tesla today. Up 7.5%, which is like insane. Like, man, the past few days and even weeks have just been, my goodness, like seriously, this market is just, it's extremely volatile, man. Like it is just, it feels like it's just on like three to 5x the speed. It's playing out moves that should take like, at least like, a week or like 1 to like 4 weeks to play out. And it's just playing them out within like literally days. Like this market is just on like 5 times speed, just playing out everything just super quickly. It's ridiculous. But nonetheless, guys, let's jump right into it. See what the hell happens. So Tesla ending at $870.43, up again 7.5%, right? A pretty wild day, but let's take a look. Now, this is obviously extremely impressive and extremely like, just amazing, I guess is the only way to really put it. But again, there is stuff to still talk about that's not necessarily looking too hot. Now, I'll be honest, I didn't think Tesla would touch this trend line again and test it this fast, in all honesty. It's just, again, everything's just playing out at incredibly like blazing speed. But essentially today what we did was we actually came up and we essentially retested this trend line. And on the weekly is the easiest way to see it because my line is actually drawn on the weekly, so it's the most accurate on the weekly. We ended up, you can see here, getting, actually, if I zoom in really closely, you can see the wick. We ended up getting rejected at this trend line, right around that 875-ish level, give or take. So we're pretty close to it still, but we did get rejected. And that's the most important thing to kind of, keep in mind. We got rejected. So that's not necessarily ideal, right? You have to keep that in mind, guys. Usually the way things work is when you break out of something, whether it's up or down, it's very common for it to be retested. Usually, it's usually a successful retest in a sense that if it used to be a resistance, it's now support and vice versa. In this case, it used to be an absolutely astronomical support. You can see all the way from literally almost like 2 years ago. Astronomical support. Like this whole line was just unbelievable support. And the issue with that is the fact that the stronger something was at being a support, that stronger it will be as a resistance. And of course, the flip is also true. The stronger something was as a resistance, and then if you break through it, well, now that support will become very powerful support. So you have to keep that in mind. So this was an extremely powerful support that we had for like literally 2 years. And we broke through it. We closed under it on the weekly, and now we're testing it, and so far getting rejected. Now, it doesn't mean that it's over yet. It doesn't mean that we can't break through it yet. But again, with that being said, it's not good that we got rejected so far. That is not ideal. So keep that in mind. Just, want you guys to be aware of all the options, right? There's still definitely a chance we can break through it, but the fact that we've so far got rejected, not super ideal. Let's take a look at more of the micro level over here. So we were setting up a bit of a bearish pattern, but we actually just at the very last like 10 minutes of the day broke right through it. So the bearish pattern was actually something like this. It was kind of like looking like this with like a flat line here, right, as it's descending. That's usually like more bearish than bullish. But the fact that we broke above it, you can see here, is pretty good. Now keep in mind, I don't think this will play out too aggressively. Now, what I'm personally expecting is this, right? So you have to take into account many things. Number one, the fact that we got rejected from the insanely powerful trend line so far is not ideal, number one. Number two, I do think that we are going to be playing a double top here. So, it's going to be like this. It's going to be bounced down here. And I do think we're going to come up to maybe like, this 875-ish level once again. And I think we'll get rejected. And that is probably going to play out in a double top fashion, which is obviously a bearish play, personally. And main reason also for that is, keep in mind, guys, I mean, in theory, we have went from 700 on the Thursday to $870. That is like, well, let's see exactly how much of a move that was. We went to the top up today. It's about a 25% move. Like we essentially moved up from the lows on Thursday to the highs of today. In 3 days, Tesla has ran 25% from the lows to the current highs. 25% in 3 days is obscene. Like that is an unbelievable movement. Like that is just like ridiculously, like just absolutely bonkers. So keep that in mind, guys. Again, when things felt like, when we're falling here and things just felt like, man, we're just going to keep falling and falling. and then we just reverse so aggressively. Keep that in mind. That is usually, it plays both ways, right? When it feels like we're just nothing but red and just falling, then you reverse. And then flip is true. When it feels like it's just, oh man, we're just going to the moon apparently. Like we're just flying up, no one can stop us. Keep that in mind. There's a chance that we will probably pull back from that. Again, not guaranteed, of course. In this market, nothing is guaranteed, and this is a wild market. Anything can happen. But in theory, we should be looking for a bit of a pullback here, in my honest opinion, because of just the way this movement is. You don't just casually fall down, let's say 24% without a bounce. Just as much, you don't casually move up, like I said over here, 25% without a bounce, this time to the downside. Like it just doesn't happen usually. Again, this market is weird, you never know, but in theory that doesn't usually just casually happen. So keep that in mind, guys. I want you guys to be fully aware. I don't want to be the party pooper over here, but I'm here to just talk facts, and it is what it is. Another thing that I want to keep in mind that is also kind of pointing to the direction of what I believe to be a bit of a retrace coming up is the fact that the RSI is starting to curl downwards while we're still essentially near this kind of a micro all-time high, if you will, which is of course this 876. So essentially the way you want to look at it is as we broke up to this micro rather all-time high, which is this 876-ish area over here, you can see the RSI is sitting at like 83 to 84, or rather 81 to 83-ish level, right? It's pretty high, and it's obviously in overbought territories because it's above 70. All right, well, as we bounced down, RSI of course followed, but the fact that we bounced back up almost to the same highs at 871, almost to the same highs, which is 876, it's only like 5 points off, but the RSI is significantly lower than this. That's usually a bearish divergence, and what that usually means is that we are coming up to a pullback. Similar to how over here you can see the RSI, its low point was all the way over here at 18, back when we were still chilling out at like 850. And even as we broke down to 700, even as we broke all the way down, the RSI still wasn't as low as it was all the way back here. That is a bearish, or that is a bullish divergence, because as the stock price is still dipping, the RSI is actually slowly making higher lows. That is a bullish divergence, and look how that played out, right? Same concept here, just the flip in this case. Again, as the stock is essentially pretty much making similar highs as to what it did over here, the RSI's current highs are nowhere near to where they were over here. So that's a bearish divergence, right? So just keep these things in mind, guys. Again, it's not like these are just guaranteed to play out that way. It's not like it's guaranteed to just plummet or retrace or whatever. But with the market, usually the way it works is you want to take into account all these different factors and figure out what is the higher probability of a movement. And in this case, in my honest opinion, the much higher, in my opinion, probability of a movement is a retracement. Now the question is, where do we retrace? Well, the first thing I'm looking at personally is going to be the gap fill to today's gap up, which is going to be around this 810 level-ish, 89, 810, somewhere around that general, like 805 to 810 level, somewhere in that general vicinity. So we'll just say 810 for simplicity's sakes. That's the first thing I'm personally looking at. And then we'll see how it, of course, reacts off of that. With the way this market is moving, I would not be surprised whatsoever if that happens in the next couple of days or so, definitely this week, because we're essentially playing this market on like 10 times the speed, right? So keep that in mind, guys. That's number one. Number two, once this pulls back to this 810 level, then we kind of revisit this and see how it reacts to this 810 level. There's a decent chance we can bounce off of this, and then we'll see how that goes. Maybe we'll set up like a massive bull. Like, I don't know. Who knows? But the point is that the first thing I want to see is a retracement to fill the small little gap we left behind at 810, which I'm pretty confident we will. And then from there, we will, of course, revisit that when the time comes and figure out what's going to happen next, right? So that's the first thing I'm looking for, guys, and that's essentially overall how I'm looking at this market. Again, fantastic movements, but again, guys, just as much as that we can't only fall down, we can't only go up as well. And same thing with the indices, similar concept. So yeah, that's essentially what I'm seeing, guys. Let me know what you guys think down below. I guess the biggest question is, are we going to break the low of 700? That's the big question. I don't think so. I really don't think so. I do think this should be, in theory, the low. There is a chance, of course. Like I said, this market is weird. If something escalates with this whole, Ukraine-Russia thing even further, yeah, absolutely, we'll break down below this 100%, no question about it. But unless that happens, I wouldn't be surprised if we retrace to maybe... Here, let's put the Fibonacci. I like the Fibonacci personally. Let's see what we can retrace here. So if we put this over here and put this to these current highs that we've so far hit, which is around this 877-ish level. And then let's color this thing, this color, just so we can see it a little bit easier, right? Again, I wouldn't be surprised if we retrace somewhere between this 38.2 to this 50%, which is around that 800-ish level, which also happens to fill the gap. In my opinion, realistically, unless something escalates this market even further to the downside, I don't think we'll go lower than 770 roughly. I do think that should be, in theory, as low as we should go in a retracement here. But again, you never know with this market. But in theory, I don't think we should go much lower than around 770-ish. But I'm definitely expecting at least an 810 revisit before we can, see what's going to happen from there. But all that being said and done, ladies and gentlemen, let me know what you guys think down below. Thank you all so much for watching. I'll see you guys for the next one. Peace.